Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 6th of November 2020, and we're looking at a World Gold Council report highlighting that China's physical gold demand is down and has been falling. But this could very well reverse in the near future. So let's take a look. Yesterday we produced two videos. One last night entitled Gold and Silver Rockets Higher as FOMC and Election Reports, and earlier in the day, China, not just on the rise, but restoring its original power. Now, we've placed links to both of these, in case you haven't had an opportunity to listen to them, in the description box below. But you may have noticed that we have focused quite heavily on China this past week or two. Not just because it's recovering from the coronavirus pandemic much quicker than the rest of the Western world, but also because analysts and now the World Gold Council sees it as providing the potential to reignite physical gold demand in the years to come, primarily because of the risk aversion, believe it or not, of its youth, and also because of the diversity of new gold products its country has introduced during this past decade. So we're going to read the WGC report. Now, it is quite long, unfortunately, but I think it's worth listening to all of it if you could possibly bear it, as it does contain some critical pieces of information. So let's go over to it right away. World Gold Council report dated November 2020. Market update. Chinese commercial banks' retail gold businesses in focus. China's physical gold investment market has come a long way since its liberalization in 2004. Primarily driven by the nation's economic expansion, it became the largest gold bar and coin market worldwide in 2013 and has maintained its dominance since. Chinese commercial banks have played a vital role in this development. Their widespread geographical network allows countrywide accessibility, and their well-established reputation engenders trust. But physical gold sales, the core gold business at Chinese commercial banks, have experienced continuous decline since 2015, despite the growth seen in other channels until recently. Combined with our recently published Retail Insights China Investment, this report aims to provide insights into the drivers behind trends in the Chinese commercial bank's physical gold business and identify future opportunities in this area. And as we can see from the chart, Chinese commercial banks' physical gold sales have weakened over the past few years. The red showing gold bars and coins sold from other channels, and the gold color, gold bars sold by commercial banks. You can see the decline. A prominent force in China's gold market. Chinese commercial banks have played an important role in developing China's gold market. After the establishment of the Shanghai Gold Exchange in 2002, a number of banks began their institutional gold businesses, providing gold industry services such as gold financing and leasing. Primarily driven by rising gold demand in China, these institutional businesses took off quickly and have been warmly welcomed by the gold industry. For instance, gold leased to corporates increased eightfold between 2010 and 2019 in tonnage terms. And when China's retail gold market was liberated, these banks expanded into retail gold businesses, offering individual investors a variety of products. Thanks to their existing widespread network of branches and long-established credibility, Chinese commercial banks' gold businesses grew rapidly. Commercial bank gold trading activities at the SGE surged by more than 200 times from 2005 to 2019 and accounted for 82% of the SGE's total trading volumes in 2019, as we can see in the chart here. Widening retail gold investors' access to gold. While institutional gold businesses of these banks were booming, their retail gold businesses have also been expanding since 2004. And over the past 16 years, these banks' retail gold business lines took shape. They can be categorized into physical gold businesses, the focus of this report, and non-physical gold products. Besides physical gold sales, a fundamental gold business at Chinese commercial banks, other non-physical gold-related trading products have attracted many retail investors. For example, by offering investors legitimate gold trading services in addition to gold contracts listed in the SGE and the Shanghai Futures Exchange, commercial banks' account-based gold trading volumes have witnessed notable increases in the past decade. Meanwhile, commercial banks also act as the main channel connecting retail investors to the SGE's gold contracts. And in 2009, the creation of structured gold products, which typically combine gold-related derivatives with fixed income products, drew attention from many retail clients. These products offer investors exposure to the gold price whilst promising a fixed return. The notional value of these structured gold products, has been increasing by more than 33% year on year on average over the past 5 years. So you can see here from the figure, we have the typical retail gold businesses at Chinese commercial banks. So we have physical gold sales, investment gold products, cultural gold products, and gold accumulation plans. Then we have account-based gold trading, the RMB, renminbi-based paper gold trading, and the US dollar-based paper gold trading. Then the SGE brokerage act as a broker connecting retail investors to the SGE gold contracts, and structured gold products. So you've got structured deposits and other products. Account-based gold trading at commercial banks. Account-based gold, or paper gold as usually referred to by investors, is the investment product banks mainly offer to retail clients for trading gold in renminbi or US dollars through bookkeeping and market making by banks. It provides the additional option of trading liquid and safe gold contracts for investors outside of the SGE and Shanghai Futures Exchange. By providing 24-hour gold trading services in US dollars and renminbi, it constitutes an important supplement to the existing gold trading market in China. In 2019, a total of 13 commercial banks in China offered paper gold trading services. Collectively, these banks' paper gold trading volumes amounted to 3,513 tons, counting both sides, in 2019, 11% higher than 2018. And the annual growth in total trading volumes of these products averaged 31% during the past 5 years. As the gold price gathered momentum and volatility rose in 2019, more tactical gold investors became active in trading paper gold offered through banks. Such enthusiasm can also be observed from the 60% year-on-year surge in the trading volumes of AUT&D in 2019, a margin-traded gold contract at the SGE. And we can see how these figures have risen, particularly since 2014, and we have a steady increase in renminbi paper gold trading volumes. A closer look at commercial banks' physical gold products. China's physical gold consumption has been declining over the past few years, growing at an average of 22% per year for a decade since 2004. China's gold consumption peaked at 1,346 tons in 2013. Since then, demand has fallen and remains subdued. While most of this decline can be attributed to jewellery purchases, bar and coin purchases also experienced a decline in 2019 after several years of growth. Broadly speaking, we believe lower growth in the Chinese economy and higher uncertainty around its outlook have contributed to the decline. Since 2015, China's GDP growth has fallen below 7% per year when the nation's economy entered the so-called new normal, as growth decelerated from an average of more than 10% per year between 2004 and 2013. And this slowdown in the economy has led to slower growth in consumer disposable income, which in turn has contributed to lower gold purchasing power and reduced physical gold consumption. And you can see from this chart here, gold purchasing power has fallen, gold consumption peaking here, dropping dramatically, rising, and back on a decline from 2019. Risk and uncertainty could be another driver for physical gold demand, especially for bars and coins. When China's stock market performance remained subdued following the global financial crisis, there was a fivefold increase in gold bar and coin sales. That's between 2008 and 2013. Similarly, a strong performance in the stock market tends to divert investors away from gold bars and coins. For instance, the 51% and 36% surge in China's stock market in 2014 and 19, respectively, could be one of the main reasons contributing to the weakness in China's bar and coin demand during these periods. Physical gold product sales at commercial banks are trending down. The deep penetration of commercial banks through all city tiers, along with their well-established credibility among retail clients, has made them a major channel for physical gold sales in China. As of October 2020, there were more than 200,000 Chinese commercial bank branches in operation nationwide, according to China Banking and Insurance Regulatory Commission. And most of these branches offer physical gold products for sale. In the first 3 quarters of 2020, nearly 40% of all gold bar sales in China were transacted through commercial banks. Physical gold products sold at commercial banks come in various forms. While plain gold bars are the main product commercial banks sell, they also offer festival and cultural gold products in various forms, which are popular for gifting and collecting at traditional Chinese festivals. Against the backdrop of a weakened physical gold demand in China, the gross volume of physical gold products sold at commercial banks has been trending down over the past decade, as we can see in this chart. The average gross sales between 2017 and 2019 were 18% lower than the previous 3-year period. Also in 2019, gross physical gold sales from these banks fell by 10% on a year-on-year basis. While commercial banks are still the first choice for many retail investors who wish to buy gold bars, coins and other physical products in China, the banks are facing increasing competition from gold jewelry retailers. Chinese jewelry retailers have been able to seize some of this market share, primarily due to main Chinese jewelry retailers have experienced a 14% growth on average in their points of sale since 2015. Many jewelry retailers offer attractive discounts on labor charges for higher value transactions, but banks are unable to be as flexible in pricing due to their complex and large systems, and gold jewelry retailers make greater marketing and promotion efforts as selling gold is their primary focus. Commercial banks, on the other hand, have many other business lines to operate, are required to comply with strict regulations, and often implement rigorous internal approval mechanisms for product promotion. And as you can see in this chart, the rapid rise in point of sale of Chinese jewelers. Gold accumulation plans, rapid growth and notable adjustment. The gross sales of gold accumulation plans, known as GAPs, rose quickly after their debut in 2010. These products entitle retail investors to accumulate gold bars or other physical forms at regular intervals or at their own choice once an account is opened. Investors can redeem GAPs in cash or through physical delivery. By giving retail clients a low threshold, innovative and convenient way to invest in physical gold, prior to the introduction of gold-backed exchange-traded funds in 2013. GAP gross sales grew at 152% per year on average between 2010 and 2014. But sales of these products started to decline from 2015, averaging an 18% annual decrease between then and 2019. Apart from a slowdown in China's retail physical gold investment demand over recent years, the rise of gold-backed exchange-traded funds, gold ETFs, in China after 2014, we believe, could also be an important contributor to the reduced popularity of GAPs over the past 5 years. In other words, GAPs being replaced by ETFs. Introduced in 2013, gold ETFs quickly gained popularity among Chinese gold investors. As of October 2020, there are 11 products listed on China's stock exchanges with an underlying AUM of $4 billion, or 66.3 tons in total gold holdings, growing by an average of 208% per year since 2013. Such explosive growth in the gold ETF market has been underpinned mainly by the following factors. 1. Simplicity. Investors can access these physical gold products from WeChat and Alipay on their phones with only a few taps. 2. Low threshold. These products are offered in units of renminbi, 1 yuan, or less than 0.005 grams, lower than GAPs. And 3. Physical delivery. Similar to GAPs, many gold ETF providers also offer investors the option of physical gold transformation and delivery from their ETF shares into gold bars, coins and jewellery at reasonable costs online. In addition, investors can trade gold ETFs via various popular online channels, including WeChat and Alipay, two of the most frequently used apps in China, while GAPs are only available at banks and via banking apps. Clients tend to access apps developed by banks for very specific purposes, such as wire transfers, and exit almost immediately once done, restricting the exposure of GAPs to potential investors. Banks are further handicapped by stricter internal controls on third-party collaboration and product promotion than ETF providers. Additionally, a regulatory change at the end of 2018 had a negative impact on the popularity of GAPs. The interim measures of managing GAPs issued on the 14th of December 2018 by the People's Bank of China increased the minimum threshold for GAP investment to 1 gram. Prior to this regulation, it had been as low as 0.03 grams. This jump in the minimum investment size possibly reduced its attractiveness to many retail investors, particularly those attracted to the convenience of buying fractional amounts of gold through other channels such as Alipay and WeChat, and may further impact its sales from 2019 onwards. Key insights to draw retail gold investors' attention. The World Gold Council has recently published the Retail Insights report for Chinese retail gold investors based on a global research we conducted in 2019. By identifying key drivers and barriers in China's gold investment market, we tried to reveal opportunities to reach potential new investors and retain current clients. Chinese investors love gold. Gold features heavily in Chinese investors' portfolios. Our research shows that gold bars rank the third most popular investment product, followed by gold coins and gold jewellery. And it's worth mentioning that compared to 2016, when we carried out similar research in China, popularity of these gold products has risen. We found that the average Chinese retail investor is risk-averse, preferring to invest in savings accounts, insurance and gold. There is huge potential for gold investment product growth among these risk-averse investors. While gold has a high penetration ratio among Chinese investors, 72% have already invested, there is untapped headroom as 24% have never bought gold products, but they're considering doing so. Simplicity and reassurance are vital for Chinese retail gold investors. Addressing the main concerns of potential retail gold investors is key to reaching them. We identified two major drivers of gold investment: the need for simplicity and for reassurance. Simplicity. Respondents told us that easy to buy and sell and no complicated arrangement or management are key drivers behind their investment choices. And our research indicates that if gold products are more user-friendly, this is likely to encourage people to invest. Also, a total of 29% of potential gold investors said they do not understand gold price drivers, making gold investments seem difficult and complex. As such, providing straightforward products, transparent information on those products, and relevant education around the gold market could be helpful in reaching potential investors. Reassurance. 44% of those who've never bought gold before told us that they worry about buying counterfeit gold and gold's purity. Meanwhile, 36% of our potential gold investors have concerns around the storage of gold. Providing information and reassurance around offered gold products and using the bank's long-established reputation and secure gold vaults could help build greater trust in gold as an investment. Outlook. Chinese commercial banks have been a vital pillar of support for developments in China's gold market. They've been the first choice of many retail gold investors when it comes to purchasing gold-related products due to their easily accessible nationwide branches and long-established reputation. And while their non-physical gold products have been increasing in popularity, their physical gold sales have witnessed a notable downward trend since 2015. Main drivers behind this decline include the rise of competitors such as jewelry retailers and gold ETFs, and weakened physical gold demand in China over the past few years. But the current economic environment may open an opportunity for commercial banks to revitalize their gold businesses. Firstly, as we discussed in our Gold Mid-Year Outlook 2020, investment demand for gold in the medium term should be well supported. Primary driving forces include the low interest rate environment, the uncertain economic recovery expectation, and various extreme inflation scenarios resulting from COVID-19 and the responses to it by the major central banks. And according to our most recent Gold Demand Trends report, underpinning by lingering global uncertainties and a bullish gold price momentum, China's gold bar and coin demand in 2020 Q3 surged by 42% quarter-on-quarter and 35% year-on-year. Second, a joint survey by China Construction Bank and Boston Consulting Group in 2019 pointed out that the majority of high net worth investors in China quoted wealth preservation as their primary asset allocation goal. Moreover, our retail insights suggest that young investors, the future dominating force in the investment market, are more risk averse than their elders and prefer gold investment in physical formats. With rising awareness of wealth preservation among Chinese investors, Chinese commercial banks' gold businesses could benefit, and creating simple products, highlighting the standing of commercial banks within the gold market, as well as promoting gold's role in protecting investors' wealth, could be helpful to achieving such growth. And it is quite remarkable to see that young Chinese investors are even more risk-averse. Well, as we can see, a diversity and simplifying of products, and a move away from risk, and a population continuing with upward mobility could arguably put the case of stronger gold demand well into the future. Another reason we are positive, gold and silver, in the years to come. With gold now trading at $1,953 and silver at $25.70, why shouldn't we feel positive about precious metals for the future? What do you think? Do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they're published. And also, if you haven't already done so, please pop across to our Richard and Greg channel, where we have discussions usually 2 or 3 times a week. Thank you once again, and please look out for our weekly update, where we will be providing quite comprehensive data on the reports, the economic reports, and probably now the election that has happened during the course of this week. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.